Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show I have Bryan Perry, who is the Chief Operating Officer of Builder Funding LLC in upstate New York, I believe. Bryan, welcome to the show.
Thanks so much for having me. I appreciate it.
Absolutely. I'm from not exactly your neck of the woods, but I said before hopping on here that whenever you're in Texas, which is where I'm in, kind of the East Coast states get grouped together. So whenever I have a fellow, Pennsylvania, New York, New Jersey, and I'm from New Jersey, it's always good to see one of my own on here. Let's start from the top though. How did you get into the real estate space?
Yeah, so 15 years ago, I started off in banking. Right out of college, I did primary owner-occupied mortgages. So I spent some time doing mortgages and then became a licensed banker. Worked at KeyBank for a number of years and then got into commercial lending. So I did commercial lending through credit unions, and I kind of made a transition from banks over to credit unions and had some leadership roles at the credit unions. And then a few years ago, I started the real estate development path, and that included my own fix and flips, starting my real estate development company, my construction company, and then now adding the private lending and my real estate license. So
Very exciting, and lots of different areas that we can touch on here. As a realtor myself and as an aspiring single and multifamily investor, I've done wholesale deals up to this point in time. I tend to think of kind of the path, if you will, of a real estate investor as someone on the outside looking in. I did a lot of networking and a lot of reading, probably too much reading, and a little bit of analysis paralysis before getting in. Then I started doing some wholesale deals, got a real estate license. Now I'm looking at doing my first short-term rental or maybe a fix and flip if we can find a deal with the right margins. You had maybe a similar path, but also sounds like different in some ways. What would you say has been kind of your growth path along the real estate entrepreneurial route?
well, I really thought about what it is to be a real estate developer, and real estate investment, real estate development, fix and flip, they're all kind of very similar. But my goal is really real estate development, scaling, taking on larger deals, and what does that entail? So after I did, my first few flips, and I'm a second generation flipper and lender. My mother did mortgage lending while I was growing up. My father was flipping one house a summer while I was growing up. So I always had these things, in my life. And it's funny how, I found those were the things that I ended up loving and wanting to do in life. Being in dirty houses and finding lending opportunities. So it's been an interesting path and an interesting journey. But lately, over the last 2 years, I really wanted to understand is what it would take to, qualify myself as a real estate developer. And that's when scaling started to happen, and bringing in partners, and understanding more about, not just doing the work, fixing the house, but listing your own house, right? Like
Yeah.
every bit of that equity that you own is valuable. So how do you retain the most equity? How do you build a brand? So those are things that I've been really focused on, which has led to all of these different businesses and partnerships that I have now going on. And I want to expand on all of those things, and really become a trusted advisor and friend to investors who are just starting out, have questions. So that liaison part was important to me too. And as a lender, I think that's where my strength is that bring any deal to the table. I'm going to go through immediately, look for deal killers. I'm going to, give you realistic cash flow expectations, help you understand the lending process. In central northern New York, private lending is not really something that's broken through. And I used it personally to start in doing fix and flips myself. And I just think it's a wonderful product, and I now have access to the private lending world, and I want to bring it to market here in central and northern New York, and then also tap into the roots of where Builder Funding LLC came from, which is New York City.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I think about hard money lending and private lending out here in Texas, and there's so many different options. Seems like maybe a different landscape out there, but also, as far as I've heard, I don't have personal experience, it is slightly more challenging just to be a real estate investor out in the East Coast. The deals, of course, are costlier, right? And then, of course, cost for materials, and then, labor, everything is just kind of a little bit more expensive, right? And so it sounds like, if I'm hearing it correctly, that there's not as many maybe hard money options as there are out here in New York.
Yeah, that's absolutely the case, and it depends on the market. So right now, being in Syracuse, we're still finding properties for acquisition at $50,000 to $60,000 multi-units that are in distress. Need a lot of work. So the cap rate and ARV on those are still very good. Rents are good in Syracuse, and I think a lot about the markets that you're in are contingent upon what's going on, the market factors. So manufacturing is a huge. Micron, I don't know if you're familiar with what's going on in Syracuse, but the Micron facility has pledged $100 billion investment over 20 years. They haven't even broken ground yet, but they've attracted investors. They've attracted businesses. And I'm excited to see if we can bring some manufacturing to cities near you, what that can mean to the real estate market as well. So
let's talk about lending as a whole, and then also building a business in this space. You have a background working with banks, and then as a developer, having done flips, right? So you understand many sides of this business. But then also, for folks who are starting any kind of venture, diving into it, of course, you've got to build clientele, and you've got to build that trust, and then you've got to tap into their warm network. What has been the process like for you, Bryan, with Builder Funding, getting it off the ground?
Well, I start with a joke. Have you heard the Einstein joke? Einstein goes to heaven. Have you heard that joke? It's a clean joke.
I like the premise. Let me hear it.
Okay. So Albert Einstein goes to heaven, and he's waiting at the pearly gates, and they don't have his mansion ready, and says that you're going to have to wait in the dormitory, and he has 4 people that he meets. And the first person he meets says, Mr. Einstein, have an IQ of 180. And Einstein says, wonderful, we'll talk about mathematics. And then the next person he says, Albert, I have an IQ of 150. And Albert says, well, that's wonderful. We can talk about physics. The third roommate he meets says, I have an IQ of 100, and we'll talk about arts and literature. And then the last person has an IQ of 80, walks up and says, I'm sorry, Mr. Einstein, I only have an IQ of 80. And he says, well, where do you think interest rates are headed? So I think that speculation on interest rates, the dumbest person in the room is speculating on what's happening with interest rates. And I'm thinking that's keeping a lot of people on the sidelines. Historically, seeing interest rates lower than they have been ever. And there's these people out there that are just speculating, well, if interest rates come down, I'm ready to hop back in, right? So I just think that they need to get rid of that mindset. Real estate, you have real asset value, and it's going to be a hedge against inflation. It's always going to be a good investment. So how do we encourage those people to get off the sidelines? They have this want to get into real estate investment, but they might just be a little bit of hesitation with what's going on with market volatility. And I just don't know, I guess, the best way to reach those people and get them off the sidelines and back into real estate, because honestly, deals are still cash flowing.
Yep.
Interest rates are still great. I'm not going to speculate whether they're going to go up and down. I'm not going to make that mistake. But what I will tell you, throughout time, real estate is a solid investment, so, and we still have wonderful rates. I mean, my 30-year fixed on a cash out refinance, 80% loan to value, is as low as 6%. So rents are going to be good to service that debt, and you can still find good properties, good ARVs. So I think you got to focus in on the deal and get off the sidelines and get people excited about real estate again.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And to your point, Bryan, when I think about, volatility, rates, the thing that has stayed, at least out here where I'm at, right? Dallas area, I lived in San Antonio for 5 years before Dallas. You might see home prices go up and down. Like, for instance, right now we're kind of seeing a cooling off, right? At least in Dallas, where you have kind of these expectations from 2 years ago, 3 years ago, where homes were practically doubling in value, and now you're seeing maybe a little bit of a pullback in that, kind of coming back down to earth. But it's not like rents are getting cheaper. I haven't seen rents go down. So if people are worried about, the price of the home, well, if you're going to fix and flip it, right, then sure, you might that might not be a strategy that can necessarily work in every case. I've heard a lot of flippers, specifically out here in Dallas, say the margins are less. But if you're looking at a long-term buy and hold or a BRRRR strategy, and you're looking at what can I do here? I mean, the rents aren't getting any cheaper. The rents are not getting any cheaper.
Yeah, the BRRRR strategy is wonderful. And one of the things you can do to mitigate, that's why I have, Perry Contracting, Perry Construction. It's because, any sweat equity that you can put into the home yourself, you're paying yourself an hourly wage right there. So I think that that's important when you're talking about margins, is trying to put some of your own work in there, having and building relationships with friends, and it doesn't necessarily have to be workers you don't know. A lot of people are interested and can paint and can lay flooring, and some of this stuff is not rocket science. It's just hard manual labor, and quite frankly, I find it fun. So, I mean, that's one way to mitigate against the margins, is doing as much work as you can yourself. But that's also time consuming, and I understand that hurdle. Yeah, I think you're hit the nail on the head. Rents are not going down. So we're going to look at each property like from a cash flow perspective, not from an interest rate perspective, but from a cash flow perspective. And that's, I think, really where we bring our strength at Builder Funding, just years and years of experience, understanding, your rents, understanding how to put together a net operating income, forecast on a property, and really, always be optimistic. But I would say capital expenditures are the things you want to focus on, maintenance. But once you have a good idea of what that's going to be, you can kind of understand, okay, is this deal profitable? Should I jump on it, or should I go on to the next one?
Are you looking at primarily lending on single family, multifamily? Are you looking at looking maybe developers and multiple properties
Yep.
at once? What's your avatar?
So again, I'm not trying to limit myself. As a real estate developer, I want any and all deals. We don't do single family owner occupied. So we're not in that space. It's just investment properties. So multifamilies, we can do 1 to 4. I also have lending for 5 to 10. I can do lending all around the country with the exception of 4 states. It's non-QM lending, right, is what we offer. So we do the BRRRR model, which would consist of an upfront fix and flip loan, and we'll do 90% of the acquisition, 100% of the rehab costs, contingent upon experience. We'll look at experience. And then we exit. Our exit strategy would be either the sale or the refinance. I really like the refinance because, again, rates aren't that bad, as low as 6%.
Yep.
Even some lenders that might go lower for 30 years fixed. So you can get out that cash that you put in. You have that after rehab value, that ARV that's heightened by the work that you put in, that sweat equity that you put in, or the builder that you hired to bring in and do that, and still a very solid plan. I've also been a part of a little bit of a different model where we buy, rehab, sell, and manage.
Hmm.
So I've worked with a property management company here in upstate New York, and they are buying, uh, rehabbing, and selling, and then they manage their property for a fee. So they get that fix and
Yeah.
flip amount, and then they get that property management side of it as well, the income from the property management services. So
You know,
so
I've
a lot of
seen
different models.
I've seen developers now. I've talked with some, at least out here, who are looking at keeping the properties and then renting them out. It's amazing, right? So we're talking
Yep.
about building, lots and lots of homes out at once, which of course, for people who are unaware of this, it's not like the city's paying for the homes. The builder's paying for the homes, which is a huge investment, massive investment, which usually they need to recoup that fairly quickly. They can't just have it sitting out there. So they would go and sell these properties, and that's how they would recoup their investment. But I've spoken to a handful of developers, at least out here, who are saying, well, when we can afford to, we would like to actually hold on to these properties and rent them out.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Oh yeah, what are you doing there when you do that? You're building equity in a real estate portfolio, which is, I think, the next level, right? So fix and flip might be the first level that you get into, but eventually, and in banking for a number of years, I can tell people that are listening that the wealthiest people on their personal financial statement are people that own equity in real estate. It's a part of, I think most people in general have this goal of like, I want to be a millionaire on my personal financial statement. How do I get there as quickly as possible? It really consists of owning equity in real estate. It's going to be one of your largest assets, along with your retirement savings. So how do you do that? How do I become more efficient at that? I think that's the journey. Those are the people that we're trying to talk to and explain this to, is that it is possible, but holding those properties, every single debt payment that you make is an increase in equity. On an amortization schedule, it's kind of a slow process, right? Because we're
Yep.
interest heavy at the top, but there's tools there as well. If you can make one extra principal payment a year, all right, you start to skip down that amortization schedule. You start to apply more principal than interest to the payment faster. You could take a 30-year loan and cut it to 22 years by one extra principal payment per year. So
Hmm.
how powerful is that if I can make two? And we're not talking about something that's real hard. A lot of times you're talking about an extra $2,000 a year you got to apply to a 30-year mortgage to
Yeah, I didn't know
really
that.
cut down. Oh yeah. So amortization of debt is very interesting. And I will encourage you, is if you're looking at lending, to look at how interest is allocated at the top and how it's reduced, and then how any subsequent principal payment can actually greatly increase your equity much quicker.
Bryan, when I'm thinking about the hard money lending, private lending space, I'm also thinking somewhat selfishly myself, looking at getting my first fix and flip, my first short-term rental, and I'm going to be going in with partners, and I'm thinking, well, we're going to need access to some type of lending. We don't just want to put our cash into this. You would like some type of funding. For people who are maybe new to this, and you're evaluating them, and you're looking at the deal, what are the core areas which you're evaluating if someone's if it, a new relationship, so maybe they're a first time flipper and also it's the first conversation that you're having with them?
Yeah, I just tell them that we're no income verification. So I don't, that's what I love about private money, because the deal killers so many times on traditional lending is we're looking to cash flow the person and not the property. But, we don't need to do that in private lending. So we got to have a good credit score. Get your credit score up over 650. How much skin in the game, how much money of my own do I have to put in? Well, we really look at least 3 months of reserves. What are reserves? That's PITI, principal, interest, taxes, and insurances. So if you look at that individual property, you want to have at least 3 months of reserves, and you gotta have at least 10% down. Like I said, if you're a brand new flipper, you might not be able to get 100% of the rehab value as well, but we can still find you something that's going to work for you. And that's when you start playing with the numbers. You might want to get pre-qualified, pre-approved before you start looking at properties. So if you bring a property to me and I say, listen, the parameters here aren't working because you're brand new, but these are the properties you want to go after. These are the margins here that you're going to need to come up with, the down payment, the reserves, exactly how much you have to have. It's not insurmountable. And then even if you don't have that, you can do what you're doing. Bring in some partners, maybe that have that capital that you're looking for,
Yeah.
to offset. So the down payment and reserve requirements. So there's a lot of different options. Syndication, real estate investment trust, all these different things that you can do to start investing in real estate. But I think for the simplest form to get started, the fix and flip, have a few $1,000s setting aside and you want to invest in real estate, that's a great start.
When people are doing, the traditional route, they're looking at a home for themselves, right? They have to have, I believe, the money in their account for a set period of time. If they're doing a syndication, though, and it's kind of buddies, or not, maybe it's an informal a
Yep.
joint venture, right? You have
Yeah, a joint
buddies
venture.
coming together and they put money together and let's call it, 3 or 4 months of PITI, and they've got the credit. Is that something
Mhm.
that you look at, or meaning like they just got the money together? Would they have to have kind of a long track record together, or can it be something where they did this relatively recently?
Oh, absolutely relative. So we do a lot of to be determined LLCs. So there's a concept in place, and we have basically what you'd want to do is create an entity that's going to own that property, and you're going to have ownership in that entity. It might be if there's three, it'll be 33 and a thirds, so 33.3, 33.3, 33.4. And we actually only require one of those owners to be the personal guarantor. So that's a
Hmm.
huge benefit too. The traditional lending, if you have over 20% ownership in New York State, typically you also have to be on there as a personal guarantor. So private money has that benefit as well. We don't have the strict guidelines. We just need one personal guarantor. Um, if you're a majority owner or 50% or more, then that probably should be you. But that's a great question. We do that all the time. We could take the application and get things started while you're creating your LLC. Typically, I don't know how it is in Texas. In New York State, it's going to take you a couple weeks because you have to do the articles, publish it, and kind of wait a little bit, register it with New York State. So there's a process to creating an LLC that's a little bit time consuming, but that's definitely where you want to go in that instance is create that LLC.
Very interesting. I think hearing you talk about this, I'm thinking about all these areas which I'm amazed I haven't heard this previously because I've spoken with so many different people. But now that I'm looking at it myself and exploring, how does exactly hard money lending work? It really does seem to be different based on the individual and the company that you're talking to. No two places are really alike, and because it's not as It's not like this has been as common or as well known for, 50, 60, 70 years. And in places like where you're at, there's not as many options. Each individual lender is truly different.
hmm Yeah, and each loan is a fingerprint or a snowflake. That's what makes it so exciting. Every property address, every cash flow situation, every business. Each one of them has to be looked at individually. And again, going back to private lending, we can do that looking at the property individually and not the person or the borrower as much. And that's what's exciting about it for sure.
Bryan, we are coming up on time here. Where can folks go to get a hold of you?
Yeah, so our website is mybuilderloan.com. My personal email is Bryan, Bryan, at mybuilderloan.com. And my phone number, 315-778-3413. Give it a ring. I work all day and night. I'm excited to answer your calls. I mean, that's one of the deal killers is unresponsiveness. So I'm going to be responsive if you reach out to me. I'm anxious to look through any of your deals. Excited to talk about how I think I could help. So please give me a ring and we'll walk through it. No deal too small or too big. We do have some minimum loan amounts around that. Acquisition. It's going to be tough to acquire stuff less than $50,000, $60,000. So you don't want to be looking to acquire properties above $60,000 and have some rehab in there. But other than that, we'll go up to millions and millions of dollars in lending, and we'd love to hear from you. I'd love to talk to you and help you with your next deal.
Bryan, thank you so much for coming on the show here today.
Yeah, I really appreciate you having me, Dylan. Thanks.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.